Well, today we're privileged to have the opportunity to have on our program Mr. Carl Morris, AO, CEO and Managing Director of Ord Minnett. Carl, pleasure to be in your
Thanks, Rob.
company. Grew up in Townsville and then moved to Brisbane. Give us a sort of sense of the Morris family and then your background, if you could.
Oh, thanks, Rob, and thanks for the opportunity to do this. No, I was born in Townsville. Mum and Dad, Dad was a builder and was up there building the hospital, and Mum was a nurse. So I spent my very, very youthful years, probably up to about age 3, living up there. My mother's family were from Lucinda. And there was sugar, worked at the sugar terminal, and unfortunately weren't sugar farmers, but worked at the terminal up there. And they moved back to Brisbane. I went to school and university. I had 2 sisters, and Mum and Dad. We lived out in just the normal suburbs. Went to sort of a normal sort of school, and then eventually was lucky enough to go to St Lawrence's and then to Griffith University here. So. Dad had we had a very large. My grandfather had a very large building company. I think it had about 1,000 people, but unfortunately it went broke in 1974. So the family it sort of changed everything around that sort of era. But I was very lucky that I came from a very loving, very supportive, and terrific family.
You attended Griffith University and completed a Bachelor of Business and Commerce. I take it, obviously, some of the interest in business might have come from your father and your grandfather. What sort of drove you to Brisbane and to study business in particular?
Oh, well, it's a bit of a stranger story than that, Rob, because I was away actually, and Dad came to see me because, being a typical Catholic schoolboy, you either wanted to be a brother, a priest, or a school teacher. And I was going to be a school teacher. I didn't even apply for university. And Dad came to see me and sort of said, why don't you go to university? I said, oh, no, Dad, I'm going to be a school teacher. And he sort of said, well, if you're the best school teacher or the worst school teacher, this is what you're going to get paid. And I thought, he said, I want you to, at least, if you're going to do something, do a commerce degree first, and then at least you'll be a principal more quickly and be able to afford to have a family and all those sorts of things. So I said, I'm not so sure about that. And he said, well, you haven't got much of a choice because you have to leave home if you want to do. Dad was pretty pretty strict on the way that he had us kids, and dogmatic on that sort of view. So I did commerce, and thank you, Dad. I was very grateful because I've got 5 children. They would all tell you that I would have been a terrible school teacher. So my grandfather left me a few shares when he passed away, and Besser, Granddad, my grandfather started that, and then it got taken over, I think, by Boral or whatever that is. So that always got me my initial interest in the stock market.
From there, I want to ask you about exactly what you said, your grandfather leaving you your shares. What impact did that have on you, and to what extent did that sort of spark an interest in you to look at the stockbroking industry?
Yeah, it was early days. If you think, I finished university in 1987, and in that period of time, the stock market was really either for rich people or for speculators. There was sort of no real difference. And, it's been a wonderful career from there because, if I'd known the wind was at my back all the way, where you had, demutualisation of companies, you had lots of IPOs, Telstra, CBO, all those sorts of things, CSL, and that the wealth management industry changed dramatically with superannuation. Superannuation has really been sort of the bedrock of what the financial services industry has been built on. So, it's been a sort of a cracker, industry to be in over that period of time, just due to the fact that the weight of money that's been behind it and been supportive of it, even though we've had some trials and tribulations with some regulatory changes, some royal commissions and the rest. But yeah, Granddad leaving me those shares gave me the interest in the stock market. I started trading some shares, very, very early on, and I was lucky enough to get a job with a stockbroking firm, which was AC Good & Co. in sort of halfway through 87. Then the 87 crash happened, and I lost every cent that I had, but thankfully I didn't have many cents. And I learned a lot about risk-adjusted returns then. And then, of course, my job then was being a debt collector for AC Good & Co. until they closed in 1990, and I joined Ord Minnett in 1990 as a junior advisor.
Tell us about the impact that 87 crash had on you in terms of your risk appetite, both at the time and then perhaps later in life as well.
Well, I knew you could go broke very quickly. That's the thing about, I think Ernest Hemingway said, you go broke very slowly and then very quickly. There's some sort of line there, and it's true. It's I've gone home a couple of times in my life and said, Louise, I'm in a bit of trouble here because, when you're younger, that's when you should take on the risk, and that's what I did. And a number of times I have done that. I was very lucky to be one of the investors in Billabong very early on, and I borrowed a lot of money, and it was certainly I just bought a block of land, couldn't sell the block of land to pay for the debt, and all those sorts of things that happen as a young person. But you learn such a lot, and you also learn about how to negotiate. And how to. It's so easy to lose money. It's one of the things that I've learned. It's so hard to actually make money and to continually make money over a long period of time. But from a risk-adjusted returns point of view, I look at now that I'm in my late 50s, I want my risk appetite to come off, and I want to be a lot more conservative now. But that's one of the things that Ord Minnett has always been about. We're not here. I've had people say to me, Carl, we want to make you. We want you to make us rich. No, you don't, because you're not prepared to do what it takes to make you rich, because you've got to put everything on the line. You probably may go broke. Do you really want that? Or do you just want me to, grow your wealth, protect your wealth over a longer period of time? Compound interest is the biggest secret of the market. And if I could just educate everyone at school about the magic of compound interest, then my life would be a lot easier.
Walk me through the 90s at Ord Minnett. As you said, started in 1990, became CEO, of which we'll get to in 2005. But reflecting on some of those sort of roles, working in different divisions and that sort of thing, how did you sort of see the evolution of your career in those early days?
Yeah, I was very lucky, Rob, because I've been here for 35 years next month. And, it sounds like it is a long time. I'm unemployable anywhere else now. No one's offered me a job for a long period of time. So, but I was really lucky that I got moved around a bit. And also the other thing is that we had, like a lot of wealth management firms, had a lot of different owners. So I used to joke that the bloke that was making the most amount of money here was the signwriter. He used to change, because when I first started, we were owned by Westpac, and then we had Jarden and Chase and JP Morgan, IWF, and now we sort of did a management buyout in 2019. So I think all those different owners also brought something. When we were owned by JP Morgan, we actually became JP Morgan Financial Services for about 18 months. So the Ord Minnett virtually disappeared. So I was very lucky that I took the opportunities where I saw them too. So if you think of Billabong, I was a young fella down the Gold Coast, young stockbroker, who brought in really a private equity deal. They then IPO'd as a late 20-year-old. Now, where else but in a firm like Ord Minnett would have given me the opportunity to be able to sort of manage that process with, thankfully, the whole team at Ord Minnett at that time to do something like that. And that was a real game changer for me, is that having that opportunity and making a lot of people a lot of money and doing quite well, and seeing how something successful could really work.
Particularly during that time, called sort of late 90s, early 2000s, the tech bubble, there's a lot of sort of new entrepreneurial businesses coming up, particularly here in Brisbane and Gold Coast and Queensland and other parts of Australia. What did you look for in say, Billabong that made it an attractive proposition for the firm, and what did you look at other businesses that sort of, you knocked them back?
Well, that's the most difficult part, Rob. One of the things that we have here at Ord Minnett now, we've had it for a few years, is we have a private capital business, which we get so many businesses come to us to invest, and at all stages, from VC to mature companies. And so at the smaller end, it's really hard, because if you're going to do, it's like a company today. I was just talking to someone this morning, and it looks like the takeover is not going to go through. But the group that's looking at taking it over spent about $60 million in due diligence. You find it, you would find it hard for them to walk away forever. They might walk away for a little while, but if you've spent $60 million on due diligence, it seems like a horrendous amount of money. But if you do a small company, your due diligence has got to be the same as a medium-sized company. So it's really, really difficult to work out the winners and the losers. The only way that you can do it is have a bit of a spread. And, I've been lucky to, I keep a list of all the companies that have gone broke that I've invested in, and it's quite a long list. And I don't keep a list of all the winners, because you remember them. You always you always remember the winners. And I even look at some of the funds that I invest in. And so, I'm in one fund, for example, I invested in just to see what they did. And I put a good bit of, and thankfully, one of their early investments in 2014-15 was Canva. And, doesn't matter what else is in that portfolio, they've got Canva, right? So, one of the advantages that you have is you do have to have that spread, because, not everything that you're going to pick is going to go right. But the number one thing that I look at is management and whether they've got their own money in it.
2005, you became CEO of the firm, started in 1990, as you said. How do you go from sort of the bottom level junior role to the top in 15 years? How did you do it, at least?
Audinet's been a wonderful place for me because I got here when there was major changes that were taking place. So if you think the old Audinate that I joined was, there was sort of us and JB Weir were the two big firms, and then like what's happened in the financial services wealth management industry in Australia, we got taken over by JP Morgan and JB Weir got taken over by Goldman Sachs. Then there was a period of time that they actually didn't want to manage their wealth management business because they really didn't have it in other parts of the world. So we got we sort of got spun out of JP Morgan. And so, what that meant was, a lot of people started JP Morgan and I was sort of kept with Ord Minnett. There was always a funny thing here at Ord Minnett was if you're a very, very good stockbroker, it's like any professional services firm. If you're the best lawyer, the best accountant, the best whatever, or very good at it, they sort of say, oh, maybe he should be a manager. And I was always very wary of going into management just due to the fact that when you're sort of bringing in business and you've got your own clients and all those sorts of things, you sort of master your own destiny. And all of a sudden, if you want to go into management, someone else is determining what your bonus is. And so if I hadn't had the benefit of having a bit of success and, Billabong and a few other things, I probably would never have taken the CEO role on, to be honest. I took the CEO role on because I thought it was a great opportunity, to live in Sydney, to take my family there, to have a new experience and just to try something a little bit different. I was sort of at that age and stage where taking on another risk, you never know where it's going to take you. And, we just finished building a house and, I can still remember packing up the house and having the transport people say, oh, where in Sydney are we going? I had no idea. I still hadn't rented a house in Sydney. I said, just drive to Sydney. By the time you get there, I'm on a plane in half an hour. I will have found a place this afternoon. And that, you've got to take on those risks every now and then. And I think I had continued to educate myself, but I'd continued over lots of parts of the businesses to be as assertive as I possibly could be in terms of improving different parts of the businesses, even though I may have not been directly responsible for them.
As you said, the business has been on sort of a remarkable transformation over the course of the past 20 years in which you've been CEO. When you first sort of got your feet under the desk in 2005, how did you go about sort of undertaking that transformation?
That is still a bit of a funny point with me because we had a previous CEO, JP Morgan, when they divested, wanted to sort of de-merge Ord Minnett, went and bought another business. And that business had a CEO. And that CEO, on the night that the transition that happened between him and I, patted me on the back and said, good luck tomorrow. No handover. Zero. I won't mention his name, but zero handover. So I remember sitting at my desk the next morning, very early, there was not another person in the office, thinking, what do I do now? And I remember ringing my wife at about 3 o'clock saying, I think I've made a mistake. And it was pretty ordinary, to be honest, because I honestly did not have a clue what I was doing. And I'd gone from being a sort of management role up here, but to becoming CEO, and all of a sudden you're it. And it's a very, everyone says, oh, it's very lonely at all. It actually really is because there's, but I was very lucky. I had a very good CFO and I had very good executive staff. It's not like, I always think of my son's a builder and he started a business all by himself. Got to find an accountant. I've got to find a bookkeeper. I've got to find, staff, apprentice. I think that's the riskiest, the hardest, the most difficult thing you can do, starting something from scratch. I was lucky. I started and I had a whole executive team. So I'm not going to complain too much because there was lots there. There was lots of support. We had a major shareholder in JP Morgan, but it was, it was experiential learning is the only way that I can put it.
The business, even at that time and particularly more recently has had a remarkable history, 150 plus years. To what extent did that, that history sort of, was that on your shoulders? Did you want to remake the business into sort of this new firm with new divisions, but you've also got to respect the traditions of the business as well? How did you manage to juggle that?
Yeah, I didn't want to stuff it up, I can tell you, Rob. Jack Minton and Charlie Ord met during World War II and set up this business. And, we sort of, I really look at the business sort of as being 70 to 80 years old when they did it. But they bought another business which went back, sort of the legacy business of the Thompsons went back to the sort of, obviously 100 years, 80 years prior to that. So, the one thing I did learn from a previous chairman was sort of stick to your knitting a bit. That term at the university, and I didn't want to admit it to sort of stray too far from what I thought was our core being was giving advice. Now and that is giving advice, whether it's to mum and dads, affluent, high net worth, corporates, fund managers, fees, whatever it is. I see our business being an advice business. And virtually everything else I try and outsource because we can't get an edge on that. So IT, in particular, is probably the best example. We're not trying to, be technological leaders here because even when Ord Minnett tried to do that at one stage a long time ago, I remember when we, threw it all in the bin and, then when got, just the normal thing that everyone got, I think we tore up about $8 million. And that's, 25 years ago probably, and that was a lot of money back then. So we're sort of advice. So we have added to the business, but we've added to it incrementally. We're sort of more about organic growth. We have bought other businesses in our time. We bought, Bayous during COVID, which was, quite a difficult thing to do if you can think of in COVID. I never even went to their office once in Melbourne, but that was a great, because their business was very much along the same lines as ours, looked the same, felt the same, and just added in beautifully into the way that the business was growing. In recent times, we've done things like a private capital business, and probably our fixed interest business has probably been the two sort of highlights of what we've added to the business over time.
I want to unpack some of those. Call it strategic initiatives that you've brought into the business, private capital being one. What's been the impetus for creating a new division and capitalising on some of those opportunities for the firm?
Well, one of the most difficult things that we have is due diligence. And, we did I was just looking at a company's fallen over this morning in terms of its takeover. And I know that the bidder has spent, they tell me $60 million doing due diligence. So it doesn't matter whether you're doing a small company, medium company, large, you still got to do all that due diligence. And what we did is we started a private capital business to sort of do that due diligence when we have sort of any sort of business that comes to us and says, we're attractive, we should invest in it. We also have a fund that goes with it, so that people can come to us and say, if we really like it, we'll actually put some money in it as well, and also offer it to our clients if they wish to invest in it, through that fund or through, a sidecar, which is we've done, numerous times here. So we look at anything that comes along to us in terms of opportunities, but as I said, the sticking to the knitting is pretty important to me. You don't I looked at one of my competitors once, and there was a business that was brought to us, and I didn't understand it. And to be honest, and I had some people that had actually previously worked there, came in and sat down with me for an hour and took me through it. I still didn't understand it, so I let it go. And virtually sent the other firm broke because they understood it even less than I did, and it ended up costing them about $18 million, I think, in losses over the next 2 years. So I think sticking to our advice business and what we've done is grow our funds under management. So if you think 2005, our funds under management was probably about $100 million. It'd be closer to $24 billion today. Our funds under advice about $65 billion. 18 months ago, our bond portfolio would have been zero. Our clients' bonds is probably about $1.5 billion today. So we've done a lot of work in actually sort of helping our clients grow their portfolios as well in terms of different parts of the business. Because if you think the stock market's only 2%, Australian stock market's only 2% capitalisation in the world, you should be a little bit more spread than that in your super fund than just owning Australian shares. You should own bonds, you should own hybrids, you should own international, obviously, alternates. We try and cover all of them.
So, as you said, from $100 million in funds under management to call it 24 billion today. What have been the keys that you've been able to, or the fundamentals for that growth to occur? How have you been able to do that? You're obviously working with a roll call of high net worth groups and family offices and funds, but how have you been able to facilitate that level of growth over 20 years?
I think two things, or a few things. I think one of the things that we've just stuck to what we know, and we've employed really good people in strategy and research to give the tools to our advisors to be able to do that work as without. I always say here, part of our job is keep the grit out, making giving the advisors the best tools they possibly can to give the advice to their clients, and that's from not only research in terms of what are the best places that you should be investing, but also make the portfolio management as easy as possibly can. And I'll tell a story that I haven't told many people, that when I first took over as CEO, we had a terrible portfolio administration system here, and we employed someone to run it, someone new, and he was much more efficient, very good at it, and we changed the name of it. We didn't change anything else. We just got better people running it, and people, as soon as they got faith that, and I put my own money on it, and a little bit that I had back in 2005. I told everyone I was putting all my funds on it, and I put my, my mother-in-law on it and other people on it. As soon as that started to get along, and people thought, the funds under management business is a much better business for us because it's an annuity style business, but it's also better for the clients. If you're a normal stockbroking client, how do you pay your broker on a transaction? A lot of the time, the advisor is giving you advice not to do things because you don't want to. You shouldn't be selling that, or you shouldn't be buying that, or it's not the right time to sell it because of tax or whatever the thing is. But you don't get paid unless you do something. So in a funds management model, the motivation there is to grow the funds on and with the client. So the advisor's incentivized the right way. The client is paying, hopefully, probably the same sort of fee over the year, but it's getting all the administration work to go with it. So the client and us as Ord Minnett are aligned in what the client really wants, and that's to grow their wealth over a long period of time.
Have you been able to, and what's your view on sort of the rise of technology? Obviously, in wealth management, there's been the creation of these new platforms, Hub24 and others. What's been the impact, and have you been able to respond to whether it's new platforms like that or even AI and its impact on financial services?
Yeah, I always remember, I remember renting a house at one stage, and Louise and I had gone out, must have been to a function. We came home, and there was the first online platform advertisement that had come on TV, and it was this lovely house. The advertisement was this beautiful car drives up, people get out of the car, he goes for the scotch or the whiskey or whatever, and there was, your stockbroker's charging you $200 a trade and we're $50. And I remember Louise saying to me, "Oh, what's your new occupation? You're dead." And of course, when online brokerage came in, we were all very worried about how our business was going to go. It was the best thing that ever happened to us, because what happened was the smaller clients who just wanted to trade the pants off went there, and the good clients who wanted an IPO advice and were prepared to pay for it all stuck with us, and of course the market grew dramatically over that period of time. So we've been able to adapt pretty well, because even though I had that little fright right at the beginning, so and I didn't quite see how it was going out, but we've been great supporters of you look at Hub24, I think it's $80 today. I remember when we did their placement at 70 cents. Wish I bought a lot more back then and hung on to them all. So we've been very supportive of those sorts of things, but even everything will change over the period of time, and things will get simpler in terms of the way that transactions take place, the way that you manage portfolios. So we've always been not at the bleeding edge of technology. We've been very fast followers. We've never, and we've allowed other people to go and spend all the money and develop it up, and and come along after them. And I suppose a good example is, Ord Minnett very early on in my career as being the CEO, we outsourced our script and settlement to a third party. And the reason I did that was, and which was quite controversial at the time, was I didn't see that we got an edge in it. I saw it like banking, which is exactly what it was. And they set up, and they've probably, it's now called, well, back then it became Pension and Pershing. It's now FinClear. And, FinClear probably got, 20 clients, groups like us that all use them, and it's just so much more efficient than all of us having our own script and settlement. So there's been great efficiencies where I've been able to save money there, but then spend that money on research, on better technology, on better things for the advisors, rather than wasting it on things which are really just transactional, add no value, and add no edge to admin it.
What about in terms of the increasing, call it sophistication of Australian private groups, as private individuals in this country? Huge amount of wealth in Australia over the last 5 or 10 years been created through technology, but not just that, through agriculture and through a lot of traditional industries. How have you sort of observed this huge new class of wealthy individuals, high net worths, family offices that has arisen over recent years?
Yeah, it's been interesting. I remember in my early career where we got a client that had $30 million, and we was wow. And I remember them buying $1 million worth of NAB, through us one day, and it was not a rumor just through Ord Minnett. It was through the market. That this person had bought $1 million worth of NAB shares, and it's extraordinary. Now, I know there was a $30 million trade from one person yesterday, on one particular stock. That's doesn't even. I didn't even have to approve it. That's just a normal course of trade. But it's been extraordinary. I think when I was growing up, the rich people were the doctors, and then when I moved to Mossman, a few years ago now in 2005, it was the investment bankers, the stockbrokers, there weren't many doctors, in Mossman, and it's been such a huge transformation in instant wealth, for a lot of people, and and managing that wealth, and you're seeing. I'm not so sure how society has quite worked that out yet, in terms of some of the lucky ones. I suppose a great example at the moment is Chemist Warehouse, where that's probably one of the greatest wealth creation businesses the country's ever seen. We've got so many pharmacists that have made such a lot of money in not a particularly short period of time, but the shares are just listed, or they've just come out of escrow, those sorts of things. So there's going to be continual major adjustments, not only for us and how we manage those people and their monies and what they wish to do with it, and philanthropy and a whole range of things. And I wouldn't even known what that word, what that word was probably 30 years ago. But we're gonna see some real changes, and you're seeing the government wanting to chase some of that down too. Taxing unrealised gains, which I've said quite a bit about, which I find still quite odd, is trying to catch some of the people that have got these massive amounts in their self-managed superannuation funds. There's a great example where it was set up for your retirement, to have a decent non-pension retirement, and now you've got some people that have got extraordinary amounts of money in their self-managed super funds. They've all followed the rules, and it is what it is. But you've now got governments trying to change some of the rules, to take some of those advantages away.
The wealth transfer, a lot has been made about the wealth transfer from one generation to the next. Do you have a sort of a view on how you've seen that or observed that trend internally in the firm?
Yeah, well, I have 5 children, and all wanting to buy houses apparently at the moment. So yes, it's a bit of a topic at the Morris household, let me tell you. So and I've seen. I'm trustee for quite a few people in their estates, and some extremely wealthy people, and you see the good and the bad of it. And the best that do it well are not too early, but are very clear and very transparent about how it's going to work. And I have a great saying that it can't always be even, but it's got to be fair. So you have different people that different kids need, different monies at different times. But, to keep the peace when the particular people pass this earth and go to, to the other side, so heaven, hopefully, it's better to be as transparent as you can. And I've seen some estates, and I've advised some estates which have been so tight where, people died earlier than they thought they were going to die, and it's just been a disaster. a complete disaster. And there's a I'm not going to say the name. There's a famous one here in Brisbane, which was a $1 billion one, which certainly isn't anywhere near that now. And as probably, I don't know what it's been, probably 15 years later, it still isn't sorted. So I'm not so sure having really tight ones, but the wealth transfer is something that should be discussed with families a lot more openly and a lot earlier than what a lot of people are doing that I can see. And I can certainly say to you that what I'm going to do with my, a couple of my kids have bought places, a couple haven't. We've had to help them out a little bit, of course, but I can assure you it'll be. If the kids are ever going to listen to this, it'll be fair. It'll be not always even, but it will definitely be fair, and it'll be very transparent in due course.
The firm today, obviously, offices in multiple different states and cities across Australia. Huge team across research, financial services, wealth management. How have you been able to build such a successful culture, and what is the culture in sort of your words of the firm?
Culture, that's a very interesting term because in Sydney, it'd have to be well over 10 years. We've had a fellow he actually sits in an office very near me now. There's a fellow called John Eales. And, John Eales has written a couple of books on culture and he even had a business that really did culture in firms. And I remember when I was when he first started off, I'd be, oh yeah, John, what a lot of, you've got to be kidding. What's that business? Your culture, you ex-footballers got to find something to talk about. And then I realised everything mattered about culture. He was ahead of his time, old John. And we talk about it often about, what is culture? Because if you look at our firm, different parts of the business have different cultures. So if you think of wealth management, it's relationship. If you think of our institutional, it's very transactional. If you think of research, it's sort of big picture and long term. So you can't, when I look at culture, the number one thing I say is clients come first. If we continue that mantra, that everything we do is on behalf of our clients, you know what, the money sort of follows. You do well because you're doing it for the right reasons in the first place. And as you know, it's all about compound interest. Over time, you'll do well. And I think I've never really worried about the day to day, the month to month, the quarter to quarter, how our earnings have gone. Because if we do the right thing by our clients, and we provide a good service and have the right mantra or culture or whatever you'd like to call it, and making sure that our clients do come first, then you have much fewer client problems, and you have much happier clients that will continue to invest and grow with you.
The wealth management industry in particular, as you know, has been subject to so much change over the last 5 or 10 years, huge amount of consolidation, big global investment banks getting out of wealth management, then getting back into wealth management. How have you seen that trend sort of play out?
Yeah, it's been interesting. We're the prettiest girl left on the block to some extent, as someone said to me earlier in the week, we're the sort of last independent, and it's a nice place to be because we can sort of map our own course to some extent, which is what we've done since 2019, and we've been we've been participants of it because we've not only have we bought businesses, but we've taken on advisors that have left some of those big investment banks and decided that the model that Ord Minnett has is better for their clients. And I make that an important distinction. If they don't think coming to Ord Minnett is better for their clients, they shouldn't come here. If they just think it's better for them, we're the wrong place for them. There's lots of other places they should go. So Ord Minnett, we hope that they're coming here for the right reasons, and that is just to the fact that they may be an investment bank that's changed structure and strategy, which some of them, when you're working for some of those big organisations, it's those directions come from afar, and it just is what it is. So we always want to be a participant in it. We think that we can not only grow organically, which is a very expensive thing to do, to grow your advisor numbers in that way, because now after the Royal Commission and now we've got to do when I first started the stockbroker, it was sort of, good luck, let us know how you go. And you sort of failed or succeeded, depending on, whether you have the energy to remain. But now you've got to do a professional year. It's a much more we actually started our associate program in 2005, 2006 when I first became CEO, because I thought the only way that we're really going to grow the people that really look like us and feel like us in the family photo are going to be if we grow them our own. So we started that program back then, and I think we've got about 20 in our program today, and that will continue to increase over a period of time. So organic growth is going to be hugely important, because the number of advisors has gone from 28,000 down to about 16,000 advisors. So the industry needs to grow dramatically just to keep up with what's there. And that's a problem around the world, as our advisors are getting older too. So we've got to bring new people in. But I think there's going to be more consolidation. It's a scale business. And there's about 270 advisors or admin it. I could have 400 advisors and not have to, do too much more other than having, another desk and another computer, that's the sort of scale that you get. But I'd still have the same research. I'd still have the same, I might have to employ one or two more people in corporate, in compliance, but it really is a scale business.
Before we move on, what would you sort of define or classify as your proudest achievements in terms of what you've done at Ord Minnett?
Proudest achievements? I think the management buyout in 2019. I was standing in an ASIC conference up the back. I was talking to actually one of the directors of ASIC. My phone rang, and it was JP Morgan saying that they sold their stake to IOOF, and wasn't the phone call. And so at that period of time, for about 10 years, I was actually the executive chairman of Ord Minnett. I wasn't the CEO. So we had when IOOF came as an investor, I decided that their ways of running things were a little bit different, the way that I thought they should be run. And so they said, we'll get a new CEO in and you become executive chairman. So we moved back to Queensland. So we had 9 years of that sort of structure, and it really didn't work. Culturally, structurally, JP Morgan, fantastic. I was on their advisory board for well over 10 years. Wonderful investment bank, but the IOOF thing just didn't work. And so when JP Morgan exercised their put option to sell, it wasn't the phone call I was hoping for. And then what we did is then IOOF came to me and said, we don't really want to buy that 30%. And I said, well, I won't buy the 30%. There's no way, but I'll buy 100%. And that was right in the middle of the Royal Commission and all the rest. Now, I had no idea how I was going to do all that, but I was very friendly with the Matheson family. I'd done some work for them. And in 2000, if you remember, there was an election then, May 18th, I think it was, and the Labor government at the time was going to change franking credits, superannuation, a whole range of changes. Now, if they had won that election, I would never have done the Ord Minnett thing, but they didn't win. And so I drove down to the Gold Coast, and Bruce Matheson was there, and I convinced him to put in $100 million. Now, Bruce was so hungover at the time that I could not possibly take that as being firm. So I did ring his CFO and said, look, I got him at a weak moment because he was pretty happy with the way the result had been the night before. And but true to his word, he stuck with his $100 million, and we're with staff and with some external people, were able to, take over the management of Ord Minnett in 2019. So to get back Ord Minnett to what I think, a lot of the executive really wanted to think that to get back to the potential what we thought Ord Minnett could be, and we're a long way off it. There's a long way to go, but I think that is probably one of the most significant points of my life, was being able to put that together. And when I look back and think about the amount of money that I borrowed and all those sorts of things, I shake my head. But I did borrow the money. I remember borrowing the money at 1.88%. For 4 years, and when that came off, I can tell you that was a little bit painful, but that's what you do. You take those opportunities, when they come along, and it's been fantastic. And the Matheson family, I have been the most wonderful partners. I speak to Bruce nearly every day, and I can tell you he's the most supportive and most generous person I've come across. And thankfully, he knows very little about stockbroking, wealth management. So he only gives me general advice, not specific advice in relation to how to run the business. So he's been and his son Bruce Jr. They've been wonderful partners in this business.
What have been the key lessons or learnings that you've learned across your career in terms of being successful?
hang around good people. That's it. And that's my father said that to me very early on. He said, you've got very good mates, and that's what I've tried to do. I've tried to stick around really interesting, really decent, and people are going to help me grow. There was a wonderful fellow called Terry Morris, no relation, when I first moved down the Gold Coast. He took me, he was a client, but took me under his wing, and he was so unique for a young fellow like me, that he was trying to help me grow rather than hold me down. If I wasn't his advisor. After a relatively short period of time, he must have seen something in me, which I see in other people now, and so I'm going to help this young fellow along, which he's done to many, many people. So I think being involved with very good people, getting advice of those good people, and trying to avoid the ones that may take you down or not the sort of lifestyle that you want to have. One of the reasons we left the Gold Coast is, it's at that particular point in time, it wasn't, the people that, we had done things, their lives were changing, and the opportunity to move to Sydney was just wonderful. Went down there, and, we had 4 kids in the little tiny Catholic school, which I still remember. First one and the second one I had to pay for. Third one was half price, and fourth one was free. So, I think that's the thing is, make sure you have as the best people that you possibly can. And it's also the hardest thing to do, because every now and then you've got to shift people along. Louise will say I'm extremely loyal, and people say I'm extremely loyal, but at the same time, that's on a personal level, but in a professional level at Ord Minnett and other things, you've got to have the best people working for you. And sometimes that's a hard discussion, and that's a hard thing to do. But you've got to continually improve your business.
When you've been confronted with periods of challenge or difficulty, how have you been able to overcome them?
No one's life's a straight line, right, Rob? And mine certainly hasn't. And I've been very lucky to be married to Louise. So I married Louise. We've been married 33 years as of last Wednesday. And I met her. I broke my leg, and she was a nurse in the hospital. And as I've always said, the most expensive broken leg ever, 5 children later. But, I've been so lucky to have had Louise as probably my greatest support in the background. Family's so important. And while I may have worked really hard, I've also made sure that the family has been the most important thing in relation. You can't have 5 children and not think that that's the most important thing. So, but I've also had very good supportive friends around it. Now, the problem is, so I'm chairman of the Broncos, and we're about to do Black Dog is an organisation that we're about to have a very strong relationship to. We're selling jerseys that started last night. We're in a few weeks' time, we're having mental health round, and the problem is with mental health is unless you share, no one's going to help you. So don't be, I had to listen to the videos. I was there yesterday, the videos said, don't be weak to speak. But also, even if you are, you've got to have those sort of friends around you that are going to do something about it, because it's a very difficult place to be. So number one thing is you got to have family, because the family is going to be your first piece of support. And unless you've got a strong, decent, great family around you, I think you're always going to struggle with it. And I always think here at Ord Minnett, there's 3 things that you need to be happy: someone to love, something meaningful to do, and something to believe in. And I see here, when people go a little bit wobbly, 1 or 2 of those things have got a little bit out of shape. And how do we help those people? And Ord Minnett has been sort of the thing that upsets me most about having so many employees. The ones that we help, we don't tell anyone about it. We don't say a word, and there's lots of people at Ord Minnett that have had a whole range of things, and we've done a huge amount of work. And then when you have an employee that does the wrong thing, and all of a sudden you've got all sorts of disputes, and you sit back and go, but you can't let the 1 or 2. I always think 570 employees, you've got to have at least 1% at any, that are giving you a little bit of grief or a bit of grit or something. But you've got to think that 95% of your staff, if not higher, are wonderful, decent, great, doing the right thing. And that the ones that have a bit of a problem from time to time, you've just got to do the most to support them. But family comes first.
In terms of your leadership style, you're leading a business with 570 odd people in the business. How do you, what is your leadership style, and then how do you maintain professional and a personal life as well?
I got told by someone the other day I was a control freak, which I had never really thought about that. And I think just due to the fact that when you start off in a business, I start off as a script clerk and, mail boy, really. There's nothing I don't know in the business, like I've had nearly every role other than compliance and research, but I know a lot about the business and representing shareholders and being here along 35 years. I've never really thought about that, but yeah, I would like to think I allow the executives to get on and do their jobs because it's a big firm and while I like to know what's happening and what our risks are, that's really my job is to manage those risks and to make sure that everyone is sort of going down the right route and acting as a team. Like we just did a transaction that I think happened 2 days ago. And the head of research actually put out a lovely note saying that we raised this company some money and that he's been dealing with them since 2013 and they're in the best position strategically they've ever been because we worked together to get them a result of buying a business, raising some capital, all those sorts of things. So that was probably one of the best emails that I've received in a long period of time in terms of saying everything's working, in terms of all the terms working. So that's success to me. So what was the second part of the question?
How do you balance personal and professional?
Yeah, that's not good. I'm very lucky I only live 10 minutes from here, so that's one of the great benefits I have. But as I've mentioned a few times, I have a relatively large family. Now, grandchildren, I have 2 grandchildren. That really has changed the parameters. But I've got a very good group of friends, and the one thing I try and do is have a couple of really good holidays a year. You really need something to look forward to. So I always say to Louise, let's plan something, even though the next one is on a cruise with a mother. I love my mother-in-law. We're going on a cruise in Norway next January with a mother. I haven't got to looking forward to that just yet. But and her brother. So Louise and I were the mother and her brother. So you do need those things to look forward to. And as I said, I've been very lucky. Probably not the right thing to say, but I've had a very traditional marriage. Because I've had so many kids, we've had to have that, and I've been, lucky enough to be able to support, Louise in being able to have. I had a cracker a while ago that we should have 10, but we moved to Sydney. We lived in this rented this tiny house that that I got to. We all couldn't fit in it, much less anymore. But yeah, work-life balance is an interesting thing, and I think as I don't feel like I've got to go to the opening of an envelope like I used to. I think that was, and that still is my job, is to bring business in. And the only way, you don't bring business in sitting in front of your computer. And, I had a crack at one of my staff the other day. I go out for lunch every day, and I might go to Woolworths and get my sushi, or I may, have lunch with someone, or wherever. I think 2 days ago I went up the sushi train, and the fellow that was sitting beside me was a politician that I knew. So I sat there for half an hour just having a chat to him. You never know where those relationships. Now, the young fellow that I had a crack at here today brings his lunch in every day and sits there at his desk eating his lunch. Wrong thing to do, mate. You've got to get out and meet people, because unless you're going out and having those interactions, those touch points, you're never going to grow your business. Sitting in front of the computer is no way to run a business, and we all get fixated on that. I try and turn it off for hours at a time so that I can ring people, talk to people. And that's the other thing. People, text messaging, emailing, it just drives me spare. So, I have lots of meetings where if someone pulls out a phone, sorry, you've got to leave the room, and you're not allowed back. So, what? You heard me, out. If you're going to be rude enough, if I'm that boring, you've got to go. People learn pretty quickly not to pull their phones out. So, people should just have conversations. It's amazing, the number of clients say, "Oh, thanks for calling." Like it's a surprise, the other 2 brokers or investment bankers emailed me, "Oh, I haven't rung me." Well, I'm not trying to give tips to my competitors here, but it's amazing having those sort of relationships. I'm not a beer broker. I don't go out, having long lunches and long dinners and all those sorts of things. I try and have a professional relationship with my clients, but a really decent and deep relationship over a long period of time.